Alright everyone, here we are at another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you guys to smash that like button if it's your first time here. Do not forget to hit that subscribe button and click on that notification bell so you don't miss a single video and you're up to date on our chart analysis here with 42 Vision. So I have pulled up the SPY and here we could see it's hit several dip areas and there tends to be reversals followed by those dip areas, and you could see it right there, you could see it right there, right there, and right there. And this has been the downtrend for the last 6 to 7 months, right? Now everyone's excited to call a bottom. We do not know where the bottom is, but we do have the charts, we do have the data to follow through with and see what's going on in the bigger picture and what's the possibilities of this actually being the bottom or being retested going into the next several days, because tomorrow is CPI data readings that are going to be released and we need to see how the markets react to that data. Now we're going to break it all down in today's video, what the charts are showing, what the data is showing, and what Jim Cramer said. It's very interesting, but before we break it all down, I want to share with you guys the home run opportunities that were mentioned this morning over at the Discord. So the home runs of the day were spectacular beyond expectations, and if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts with 42 Vision, check out the link down below in the description to the Discord and getting connected to our 42 Vision indicators and becoming part of a growing community of investors all looking to learn and grow together. So these are the two stocks I mentioned this morning. Both of them gave jumps of 5 to 10%, 10% plus, but one of them turned out to be a home run, and that was GOEV. We caught it in the pre-market as it was pulling downwards, went into strength and consolidated, got that bull indicator again once it went into strength towards the bell, and even after the bell, jumping up to a highest point of possibility of 50% plus with these bull indicators. Full transition from dip area to rip area on 42 Vision. And not only was this the home run of the day, but also our Tesla bot sent out a bear indicator at 9:50 a.m. and within minutes, put options went up 50% plus within the move, guys, at the highest point of possibility. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord and the 42 Vision indicators. We look forward to having you join us, and let's jump into these charts. So here we are with the SPY, and we're starting to pull back down after trying to bring itself back up. This is at a very key level here where it either is going to break to the upside and use support levels as it goes higher, or break through support levels and create new resistance levels as it goes lower, right? And a lot of people always say, oh, anybody's saying in the video it could go up, it could go down. I mean, you need to look at both sides and where things are at, and what you need to know is the key levels that allow you to see what is going on and what the overall direction is going to turn out to be, right? That's what we do here. No predictions, no guessing, straight to the point and knowing what's going on. And why charts matter? Well, charts are the ones that hold the truth always. And you're going to see that when we zoom out, when we zoom in, if it's your first time coming across the channel. And if you watch my videos frequently, you know I'm all about charts. So I'm going to pull up the bull and bear indicators here, which you can now gain access to as well. The link is down below in the description to the 42 Vision indicator and getting connected to our SPY bot, our QQQ bot, our newly released Tesla bot, and we also have our Apple bot, and we have many other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. So here we are with the SPY on the 1 day, right? And the first date that we got a bear indicator was January 10th. And when we started going down there and it popped up, I did videos all throughout January and February, all the way up to this point, back to back, almost every single day. And up to this point when this bear indicator popped up, and things have just kind of been going downwards since April, right? But February, March, January. I followed through with it and updated every single viewer all along the way. And every single time these bull and bear indicators have popped up, we've always gone back in time and compared it to previous times of crashes. The 07, the 2000 bubble, as well as the 2020, how different it was from this one, right? And the previous ones. Now, when I zoomed out to the 1 week, the first date that the bear indicator popped up was in January, and we followed through all the way towards March and even April, how things try to come back up. No bull indicator to cancel this out. This bear indicator was dominating the chart all along, rejection, and since the beginning of the year, we have been under a bear indicator, and we're still under a bear indicator within this weakness, and we've hit dip areas 2 times, right? And when you zoom back out to 2020, it was very short-lived, and then also the 2018 correction, right? At the beginning, I would call this a correction until we hit bear market territory, which is 20% or more, and it turns into a crash. Now, these corrections / crashes were short-lived, and once those bull indicators popped up, they lasted for about a year to 2 years here, right? In the last several years. Now, when you go to previous crashes that are similar to how this one's reacting, that it's been under a bear indicator for several months and weeks, right? You go all the way back to 07 and 2000, you could see here how it had its ups and downs, but no bull indicator in the process until the big collapse came. And then once that bull indicator popped up, just like this one right here as an example, it popped up in May of 09 and it lasted until the next bear indicator in May of 010. So basically a whole year there, right? So same thing goes for once that bull indicator pops up. We can't tell where the bottom is, but we have history, right, to show us how it reacted in previous times. This was 2000 all the way until 03. Once it finally popped up in May of 03, it lasted till March of 04 and continued into December of 04 within that consolidation and continuation within the volatility. But look how long this lasted as well, right? It lasted under a bear indicator from October of 2000 till November of 01, and that bull indicator turned out to be a fake out, trying to consolidate, and then it went right back down. So when you look at these 2 previous times in history that we've had a crash, right, and it was pretty significant, the bottom cannot be found, but we can strategically place ourselves to maximize within the average cost, right, of the dip areas and the rip areas, right? And right now, anything that hits white red borders is the best price that we know of right now compared to yesterday, the previous month, the previous 6 months, right? Because this bear indicator has implied, right, and shown us that there's been weakness since the beginning of the year, and it lasted all the way until now. And this is where I tell you guys, 42 vision allows us to see the dips and the rips and where the real strength is and where the weakness is, as we could see here in these last 2 bear indicators that popped up on the weekly that lasted for several days, months, and weeks, right? So very important to be able to understand this is not about knowing where the top is and where the dip is completely of the bottom, right? But being able to strategically place oneself to dollar cost average at the best prices. If it's been showing a bear indicator when it came back up here and it rejected, it's not only about just dollar cost averaging, but maximizing on the direction because it rejected, no bull indicator, and things went lower. Now for the long-term investor, dollar cost averaging, you definitely want to wait for those white red borders. And those have been the best prices that we've seen in the last 6 months. I mean, between right here at 410 all the way down to 380 and then 404 all the way down to 463. Those have been the best prices within that range, right, of that back and forth. Then way back up here at the beginning of the year when people thought that this was the rip already and it ended and things were at 460s and all the way down towards 420s. Those prices were a lot higher. And every dollar counts when dollar cost averaging and maximizing on the moves to be able to see what's going on. Is it guaranteed for this to stay under a bear indicator and we're going to continue to go lower? No. Eventually there may be a bottom, but we don't know where it's at, right? In between all of that, I believe, and I've stated this since the beginning of the year, there's going to be a lot of volatility. And within the volatility, if I zoom in and show you guys the 30-minute, there's plenty of opportunities before my eyes every time I look at the charts. I mean, from these bull and bear indicators, every single time there's able to be a swing trade opportunity in my eyes, right? My opinion on how I look at it. And on the 5-minute, there's daily opportunities between the bear indicators, the bull indicators that last within several minutes to hours, and call options and put options can go anywhere up from 50% plus to hundreds of percent plus every single day, and even individual stocks as well. But let's go ahead and look at this together, because this is what Jim Cramer said. I find this very interesting, and he states, this is a whole commentary here between him and some other commentators talking about how he believes July 13th will be the market bottom, which is tomorrow. Well, why would he say that? Well, tomorrow we have some big data coming out, and that is CPI, guys. And not just CPI monthly, but year over year. A lot of people are saying that it could possibly reach upwards year over year to 9% or more. Now, last month's reading was 8.6, and this is what is expected from analysis, right? 8.8. If it comes lower, that may turn out to be a surprise for the markets, especially if it comes closer to 8.6 or lower than that. The markets might like that. It doesn't guarantee anything, but they may like that. Now, if it comes at 8.7, 8.8, that is kind of like a neutral expectation. Like the market's going to try to figure out what this means. Have we peaked with CPI or not? But if it comes in at 8.8 or higher, or significantly at 8.9 or 9%, that is where things are going to get rattled up and shaken up, right? Now, core CPI year over year was last month at 6%. This month's expectation is 5.7%. That comes in lower, same thing as I stated for the year over year. If it comes in higher, same thing as well. It could shake up the markets even further. Now, core CPI and consumer price index here together, 1.1% and 0.5%. So 1.1% is higher than last month's reading, and 0.5 is lower than last month's reading. So if this comes in at 0.6 or higher, or 0.5 or higher, I don't think the market's going to like that. Lower than 0.5, it's going to create some type of relief or try to make the markets price in what this means for the Fed, because this is how the markets see what the Fed is going to decide. You could see it every time that we've actually had the CPI data reports. The markets get real volatile, right? So right now the market is pricing in a pullback for the last 2 days, and at the last minute here, the last hour of the day, right, or last 2 hours, basically the market started to fall and tumble. So right now, this could be a setup for a bull run if these data points come in lower than expected, right? But if all of these come in higher than expected or really close to the expectation or higher than last month's, that's going to create a shakeup in the markets. And that is where some people state that Jim Cramer is notorious for his timing and what he states. I look forward to seeing your thoughts down below. Do you think his timing and predictions make sense or actually turn out as he says they are going to turn out, or are they the opposite? Some people say it's the opposite, but people say he's notorious for his predictions. So he could turn out to be right if this data comes in lower than expected on all angles, right? But if it comes in harder and year over year and month over month, that is going to create a big catalyst for the continuation of this pullback. Now, the big question mark here is, will it go ahead and retest the lows? So when we put the 1 day here, we've been under a bear indicator since way up here at 444, and we've tried to come back up and we always come right back down, right? So tomorrow's data will either break this right back down below 372.78 and retest the lows of 362 eventually if the data is that bad, or break through it as well. So that is key right now. Those are the two levels I'm watching to the downside after tomorrow and how the markets start to react and price this in. Now to the upside, I'm going to be watching $393 and $400. If that gets broken through, then up here at 417, 420s will be a key level based off the history of the chart. If the bulls can retest, regain control over the chart, and I'm going to be watching if this bear indicator gets canceled out and a bull indicator pops up in the process. Tomorrow's a huge day. We're still under a bear indicator on the 1 day. We're still under a bear indicator on the 1 week since January. And I have not showed this to you guys, but we're under a bear indicator since June of last month. It confirmed from last month to this month. And here we are trying to hold above the lows of the 362 range. Now, as you could see here in 2020 and 2018, it lasted only for 2 months. This is right now our second month in it. Last month confirmed into this month, 2 bars, right? And then things reversed. But when you zoom out and you go all the way back to 2008 and 2000, 2001, it lasted for several years, guys. And here we are in the process that I am looking at 2008 as a possible comparison because we're on our second bar here, right? The bear indicator on our current time frame, right? On the 1 month, we're on our second bar. If it tries to come back up, I'm going to be watching if it's only going to be 2 green bars or actually back-to-back several bars before that, right? Because we want to see in between when the reversals actually start to begin, at least 1 red with green borders to signify that we're getting out of the dip area and moving onwards to the upside. But if it tries to pull one of these and it's just green bars, I'm going to go ahead and be watching, because on the 1 week during that time frame, when you look at that same time frame all the way back up here, it tried coming back up, but no bull indicator popped up. And on the 1 month, you could see here that no bull indicator popped up, and then all of a sudden canceled out on the 1 week, on the 1 month, and the bear indicator has been dominating, and it lasted for several years. Now, is it guaranteed to do the same thing? Is it supposed to move exactly the same? No, but I'm using history and the charts to watch closely the behavior of what's going on here. Now, this could be very different. This could actually have 1 less bar or 1 last bar after this, and then it turns back around, or it could have multiple ones. But right now, I'm using that as comparison because this right now is looking pretty close to the 2021 month if it turns out to just be 2 bars. But if it tries coming back up with green bars and then it rejects, well, then I have something to compare to, and that's way back here in 2008 all the way to 09. Now, we need to watch carefully these support levels that I shared earlier in the video. I'm going to continue to navigate through the volatility because I don't think it's going anywhere. And within the volatility, there's opportunities presented daily. We have our SPY bot, QQQ bot, Tesla bot. We just got our Apple bot, and we have many other bots on the way so that you guys could receive the clarity and edge that you deserve within the volatility of the markets, guys. Join us, become part of the community, and use the same resources that other members are using to maximize and navigate through the volatility with an edge and clarity that they deserve and that you deserve. We look forward to having you join us. And as always, thank you guys so much for watching, and let's make some money.